Keith, okay. I think everybody's focused today, especially because we're recording this on July 13th. The conflict with Iran has flared up again. The U.S., I think President Trump is talking about reinstituting the blockade, or maybe they're doing that. So let's talk about the Iran conflict first in the context of precious metals. What's kind of your forecast for gold and silver, maybe over the next 3, 4, 5, maybe 6 months? And does the Iran conflict change your forecast any in either direction? The conflict renewing itself, or maybe the conflict hopefully eventually ending and we get some kind of peace deal done. Does that change your outlook for gold and silver either way?
It does postpone the resumption of rising prices, no question about that. And there's a variety of reasons, I think the core of which will probably appeal to people who study the euro dollar, which is a desperate need for dollar liquidity. When this thing got started, there are a lot of people that are traders, not necessarily exclusively in gold, but in, let's say, crude oil and natural gas and all the other things that have to go through the Straits of Hormuz. You know, there's one firm that we know of that was said to give us a deposit of gold to put into our program. They trade gold, they trade a lot of different things, but a lot more oil than gold. So, oil this big, gold this big for them on their balance sheet. And all of a sudden, the war starts. So these guys, I don't know if they owned oil tankers or if they just contract with them long term, but either way, they control X number of oil tankers and they can say, go here, pick this up, stay here, do this, whatever. But it's oil trading. So they found themselves in an untenable situation that they were long, I believe it was Qatar contracts and short Brent. Oops. Now, of course, this is February, right?
Right.
They didn't know. I certainly didn't know, and I guess they didn't know either. So once the war happens and you can't get the ship into Qatar to pick it up, certainly you couldn't get it out if you did have oil on the tanker. What do? You have, it's a classic short one thing, long another, kind of pair trade. The thing you're long, Qatar, now is probably going no bid. There's no buyer's for it because unless you can ship it out, it's not worth anything. So you could try to close that leg of the trade, but how and who's the bidder and at what price? And at the same time, the thing you're short, which is Brent, is skyrocketing. So, you either buy your way out of this position, which needs a heck of a lot of dollar liquidity, or you keep feeding the margin meter because your brokers keep saying, give us more margin. You keep feeding the margin meter knowing that if the straits are ever reopened and the war ends, you'll be made whole. You just need a heck of a lot of dollar liquidity in the meantime. I don't know which way they went. That they probably weren't sharing that external to the company. But what I do know is that they said, okay, look, we still love you and we do want to come back and deposit some gold, but not right now. And that's been that way, right? They haven't come back and deposited any gold. So, something that would have been early March, here we are in mid-July and still hasn't happened. And so whatever gold they had was sold to meet these margin calls. I imagine a lot of other people in the same position. Now, you have countries like India that are impacted a different way. Oil is a dollar market. So if you're India and you're importing oil, you're consuming your limited FX reserves, dollar reserves, to import that oil. So Prime Minister Modi, I guess this is going back 3 weeks maybe now, I don't remember the exact date of this, said to Indians, look, maybe don't drive to work, telecommute or carpool or take mass transit, but reduce fuel consumption as much as you can, turn the air conditioning to a warmer, temperature, put up with it because Mother India needs your sacrifice. And by the way, also don't buy gold.
That was a big one, right? Don't buy gold.
The consensus in talking with Indian jewelers outside of India is that, yeah, everybody in India is going to say, yes, of course, boss man, Mr. Modi, Mr. Prime Minister, sir. And then they're going to go and buy gold. So what Modi did to back that up or follow up with that, then a week later, 2 weeks later, short order was massively increased the duty on gold imports. So it's now 15 or 16%, which makes it pretty unattractive to buy gold. Obviously, that's going to have a damper on Indian demand. Turkey has done a similar thing with quotas. So to import gold into Turkey, you need a license and you get a quota. And we know some of those guys and the quotas have been reduced to, like for a company, get 50 kilos. So basically on day one of the month, they import their 50. Okay, now what do we do for the other 29 days of the month? So, you have two governments in major gold consuming markets that are devaluing their currencies and trapping their citizens into keeping them out of gold and therefore theoretically keeping them in the currency.
So you've got two major trends there, right? On the one side, you've got selling pressure because there's pressure in the private economy as well as the public economy. Turkey did this too. They did a gold lease early on. What was that, March or April? So there's selling pressure because people need to raise dollar liquidity. At the same time, you're saying on the buying side, you got India, Turkey, and probably some others who have been at least persuaded at the margins to not buy gold. So Selling pressure, lack of demand pressure, at least at the margins. It explains why gold has struggled here for the last several months. And really going back to January when it was at high. I did want to ask you about India too, because I've seen conflicting reports, and you probably know, at least for me, to try to separate and sort out how much of an effect there has been. And maybe you don't know, maybe it's really too hard to truly track, but has there really been a substantial decrease in buying from India, at least at the margins, because of the tariffs? I know the Modi announcement, people were like, yeah, okay, thank you. We'll take it under advisement. But then the tariffs came in. I've seen some reports saying that imports have been substantially affected, and some say that it wasn't affected at all. Can you clear that up at all?
Yeah, there's definitely an impact. I don't have
Really?
hard data. Yeah, yeah. You raise import duties from 5% to 15%. We can say it affects the margin. That's a 10% is a pretty fat margin. So yes, absolutely it does. So the jewelers inside India are reconvening their board, trying to figure out what do we do, because also it's politically unpalatable. Now, if you're a mom and pop jeweler, you may not care too much. If you're a major corporation, and there's some really big jewelry companies in India, to go against what the government is telling you to do is not exactly politically, what was the old term? Not a good career move.
Yeah, especially in
Uh,
India.
yeah, so they're trying to get more gold out of people's hands to recycle it. They're trying to do a bunch of other things to make money in business while they wait for this crisis to be over. So yes, I don't know how big the effect is. There's definitely an effect.
Well, okay, that I think that's what you would expect, but you never know when you hear some of these conflicting reports.
Oh, there's so much BS out there when it comes
That
to.
Yeah, and that's one of the reasons why I wanted to have you on here, is to help people clean up some of this crap, because you hear all sorts of stuff. I mean, look, the Iran conflict messes everything up. There's a huge fog of war. We don't really know what's going on to a good enough extent in the Middle East. I mean, you certainly don't have a whole lot of visibility down into some of these deeper inside transactions like you have, being in the gold market for as long as you have been. So there's any information that you can share about what's really happening, what's taking place, is really helpful. So let me bring it back to the beginning here. Okay, so the Iran conflict has been negative for gold, which pretty obvious. I mean, gold prices were like this, and then all of a sudden, okay. In fact, you can actually, was it gold was kind of hanging in near its high, and then as soon as the conflict hit, the downturn began.
It broke off the high pretty hard on January 29. So you could say the gold market was due for a correction anyway, and that certainly isn't wrong. You could also say that maybe, what's they say, there's wisdom in crowds, that maybe there were people that knew conflict was imminent
Chinese.
and were trading the gold market and either
Yeah.
ceased their buying or actually started selling. Now, 2025 was a very funny year because you had relentlessly rising gold price pretty much without Western retail participation. The stackers really didn't, buy that. And I've talked and written about this, mostly talked. I haven't done so much writing in recent days that, Pavlov's dogs have been trained from the second half of 2011, let's say into 2019, every time there was a blip, don't trust it. Because first of all the gold experts will come out and tell you this is it to the moon. And anybody who bought those blips, and there was lots and lots of them, just got burned again and again and again. So the long-suffering gold bugs just sat out 2025, weren't buying it. But you had more and more, call it sophisticated institutional money, family office money, certainly in the West, as well as everything going on. Now, buying in the East was a different story. There was, a lot more of that in Dubai, in India, in Turkey, and for different reasons, right? So each of these different realms, if you want to say the Asian or Chinese sphere, the Turkish world, the Arab world, and the Indian world, they all have their different reasons. And in China, it's fear and distrust of their government. Everybody with any degree of money is constantly working to evade the capital controls. It's illegal, by the way, to get your money out of yuan into dollars, and they all are working, to do so. And gold is somewhat open to them. So they're doing it as not an anti-dollar play, but an anti-yuan play. In Turkey, no question, it's an anti-lira play. Of all the currencies we're talking about, that's the one that is flirting with skirting hyperinflation.
Yeah, that's the traditional gold story, right? I mean, Turkey and gold, I mean, that's right to a T, the textbook definition.
Yeah, India, I wouldn't say there's imminent hyperinflation, but the Indian currency is designed to go down, and it's pretty good at doing what it's designed to do. I think over long periods of time, 7% a year against the dollar, and the dollar's going down against gold. So if you want to buy gold in rupee terms, it's almost a can't lose trade. Never say can't lose, of course, but that's an anti-rupee trade. And then finally, in the Arab world, they love gold. Firstly, partly just a pro-gold trade and not necessarily anti-currency. To the degree that it's anti-currency, that's the only one that has a component of anti-dollar, because the Arab currencies are stable. They've been pegged to the dollar for many decades. Unlike the banana republics of Latin America, those pegs are stable. You look at the the UE dirham. You look at the currencies of some of these other, any of the Gulf states really. they're table flat over, 3 decades, right? There's no real reason to worry that when you go to bed in a country like that, you're going to wake up in the morning and have 50% of your savings gone, as would be the case in a place like Argentina, where that's occurred 8 or 10 times over the last 4 decades. If those people are dumping currency to get gold, there is some degree of anti-dollar component to that, as well as just anti-currency generally, and they love gold. Traditional, it has religious significance as well as cultural significance. And each of those worlds has their own dynamics. So at the moment, sales in UAE are pretty robust, all things considered, especially that there's no tourists there. And even,
What else are we going to do at this time, right?
a majority of the expats aren't there. So the fact that this massive oversized gold market, which is largely for tourists and expats, is still surviving, even though the tourists are gone and most of the expats aren't there either, is actually saying something about the strength of the local demand.
The portfolio that performs in one economic regime can get crushed in the next. So in this free webinar, we're going to reveal what those 4 economic regimes are, how to identify them, as well as the assets, historically speaking, best positioned to perform in every environment. So reserve your seat now and learn how to prepare your portfolio before the economy shifts again.